Day 20. How are you going to afford that home project? Your family is growing and you need that extra space.
You're finally empty nesters. Time to get working on that bathroom project.
You had a tree pierce your roof and the insurance company isn't going to cover all of it. Oh wait, that's me. Financing your next big expense is troublesome, especially in the interest rate environment we find ourselves in. But if you're like me, you don't really have any options. So what do? This is my grill. The most popular option that you might want to consider is a HELOC, also known as a home equity line of credit. Now, a line of credit allows you to access money from a lending institution. In the case of a HELOC, you're borrowing against your home's equity. Now, I don't have enough time to go through all the intricacies of the calculation of what you're eligible to take out from a HELOC, but just know you need to have significant equity to be able to utilize one. Now, when you do run into an expense, you can access the line of credit. And you can use it to pay your bills or pay yourself back. And of course, that means you are paying back the line of credit back to the lending institution. The next is a cash out refinance. Just like in a HELOC, you need to have sufficient equity in your home for this to work. Basically what you're doing is you're increasing your mortgage up to the current value of your home. And thus you receive the difference. In an incredibly hypothetical situation, if you owe like $200,000 on your home, but the house is worth $300,000, hypothetically, you can access the $100,000 worth of equity by increasing your mortgage up to the larger value. That $100,000 then can be used for your project. Again, all hypothetical here. Finally, you could use your taxable account or a Roth IRA. Now, if you use your taxable account, you're selling securities, which means you'll incur capital gains on the earnings portion. And generally, that's at a more favorable rate than your ordinary income tax. Now, if you're using your Roth IRA, remember, you can access your contributions in a Roth tax and penalty free. In either situation, you'll avoid a bigger tax hit than accessing your pre-tax money. Now, personally, not on this home, but on our former home, we used both the HELOC and the cash out refinancing, and it worked well for us. How about a bonus? You know, you can likely borrow against your 401k as well. That's a terrible idea for most people. If you're thinking about borrowing against your 401k plan, please talk to a professional before you do so. Actually, that might make a pretty good video. So, all these options are at least worth considering. Now, what am I gonna do?